Hi everybody, George Fokas. I'm currently teaching my son who 2 weeks ago decided wanted to learn the Focus Beyond strategy. And so we opened up a dummy account on the live markets, and I've been teaching him step by step, like I would any other new member in our community, the process of 1, placing a trade, 2, the income we've made, and 3, we get paid to wait. So I've just done a review with him. It's evening. It's currently 7 o'clock at night. Today is Wednesday, the 1st of May, and 7 p.m., 7:03. And so I just want to go through 2 trades, novice, 11-year-old. I'm not doing anything different to what I would with any other member, other than I'm just taking him through the process, treating him like any other member would from the beginning. And just want to show you briefly the income that we've generated and the time frame that we're in a position, irrespective of the market going up or down. Now, you need to be aware when it comes to this strategy, the market will move up and down, which we can't control. I'm currently in positions that have gone down in value from the time I bought them. So it's not like we buy a stock or we buy an item and it goes up. We expect it to go up. We don't expect it to do anything because we don't know what it's going to do. But we want to use it to generate income off it, and that's the critical thing that people don't realize when it comes to the stock market. We're not trading it, we are creating it. And by creating the market, it means we get paid from day one, and no matter what the market does, and we are getting paid to wait. Now, just so I can quickly go through, we've got 2 trades, and I'm just going to show. I'll quickly show you. I'll turn the camera around if I can, but I'll show you 2 trades. I'm not going to mention the stock codes. That is, confidential information. Really, it's our intellectual property, and the way we find really good quality stocks and good candidates. We've got one particular stock that he got into, US company, global company. On the 22nd of April, so last Monday, which we bought the stock for we bought the stock for $39.84. So bought a stock for $39.84. So we've outlaid some money. We bought 300 shares of this company at $39.84, and we created a contract. So last Monday we got in, today's Wednesday, last Monday we got in, bought the stock for $39.84, and then created a contract at the same time which says that we're going to sell this stock at a price of $40. When's expiry, Jeremiah?
On the May 3rd.
May the 3rd. So May the 3rd, this Friday. So we've done a contract that says this Friday, so from last week till this week, 2 weeks, that if the stock on Friday this week, the 3rd of May, closes at $40 or higher, we have to sell the stock. That's the agreement we have. So we bought it for $39.84, and we have an agreement to sell it at $40 this Friday. Now, the person who bought that contract last Monday when we bought the stock paid us income in our account of 95 cents per share. So 95 cents we have made per share on our $39.84 investment. And basically this person has said to us, over the next 2 weeks, we believe that stock by the 3rd of May will be higher than $40. And if it's higher than $40, they will buy our stock and pay us back $40. But we bought it for $39.84. Now, that person who has an agreement with us has paid us from day one 95 cents. So I've just got a calculator here, and I just want to do this. Now, this looks like a very supersonic calculator. So let's turn it on. I need my son here to help me turn this calculator on. So 0.95, very simple. Let's do this calculation here. 0.95, which is what we've made on our investment. So we've made 95 cents. Divided by our investment, how much did we buy the stock for? 39.84. As a percent is a 2.3% return for 2 weeks. So think about that. We've made 2.3% for 2 weeks on the basis that we just have to wait. Being paid to wait and earning that income up front, guaranteed, no matter what the market's going to do. That's cash flow. We've bought another stock, and I'm not going to mention the code. We bought a second stock last Wednesday, or a week ago. And how much did we buy that stock for?
$28.19.
So we bought it for $28.19. And we've done a contract which expires when?
On the 3rd of May.
3rd of May. So we've done another contract. So last Wednesday now, so with the first one we did on Monday. Then on Wednesday we entered a new position. And that contract also says it's going to close this Friday, the 3rd of May. So realistically, 9 days. So we've bought the stock. Bear in mind, we've bought the stock for $28.19, $28.19. And we have said that on the 3rd of May, if that stock closes above what price?
28.
So the strike price is 28. So if that stock closes above 28, we bought it for 28.19. We're saying that if it stays above 28 on the 3rd of May, we are selling it. Now you'd be thinking we're losing 19 cents because we bought it for 28.19 and we're agreeing to sell it at 28. Now you are correct, we're losing 19 cents. But how much did they pay us in income from day one up front? Yes?
79 cents.
79 cents. So we've made 79 cents. We're going to lose 19 if it's sold on the 3rd of May, because if it stays above 28, we sell it. So 79 cents minus the 19, we've made a net of 60 cents in our pocket if it's sold. So let's do the calculations again. We're going to make 60 cents. And how much did we buy the stock for again?
28.19.
60 cents. 0.6 divided by 28.19. Just doing that here. As a percent is 2%, 2.1% for 9 days. Upfront income guaranteed in our account. An 11-year-old is doing it. No difference to the way I teach all our members and how my coaches teach our members is what we've just done here. But let me ask you this. How much did we buy stock number one, the first one, for? What was our purchase price?
$39.84.
$39.84. What's the current price right now?
$40.07.
$40.07. We bought it last Monday for $39.84 and it's currently $40.07. And we've got a contract to sell it at $40 this Friday. So the stock's gone up. Could have gone down. We still made a 2% return. Second stock, how much did we buy it for?
$28.19.
$28.19. We've got a contract at $28. But what's the current price right now?
$29.89.
So we bought it for $28.19. Current price, $29.89. It's higher than what we bought it for. But even if it's lower than what we bought it for, we've still made money no matter what the market does. But the average person trades the markets trying to predict which way it's going to go. We're not here to predict which way it's going to go. We're here to earn income off the market no matter which way it goes. Is that correct?
Yes.
2% in 2 weeks and 2% in 9 days. Better than what a bank's going to pay him if he had money in a bank account and he doesn't, because it's useless. We use it to invest. No point in putting it in the banks because the bank's not going to pay us anything. So the banks will use your money to earn this income on a monthly basis and pay you that a year. Wouldn't you prefer to get it over 12 months, each and every month, over 12 months as opposed to once a year? It's a choice, right? I'm George Fokas. This is my son Jeremiah, and we've just made some money basically to wait. Thanks for watching.